Okay, welcome to video 5. In this video, we're going to prepare the financial statements. So we have completed the worksheet. We have used the worksheet to journalize the adjusting entries. We posted to the ledger. We prepared the adjusted trial balance, and now we're going to prepare the financial statements, which is the main purpose of the accounting cycle, because we want to share the financial information to our external users. So the main purpose of all of this is these financial statements. So we can get our numbers from several different places. So we have a draft of our numbers on the worksheet here, the income statement and the balance sheet. And those same balances can be seen here on our ledger, because this is completely up to date, so it's the same balances right here. And then we could also look on our trial balance. So we could look on any of these places to get our numbers for our financial statement. So what I've done is I've just copied the worksheet portion, the income statement and balance sheet portion in here, and I'll copy the accounts, and then we'll have that to look at. Okay, so the first statement we will prepare is the income statement, because we have to have net income, which flows through to the statement of owner's equity, and then we have to have capital, which flows through to the balance sheet. So the first line I've already put up here is the name of the company. The second line is the name of the financial statement. And then the third line is showing that this is for a range the entire month of September. The first part of the income statement lists your revenues, and the name of our revenue account is fees earned. And then the adjusted balance of fees earned is $7,600. Next, it will list out all expenses. And our first expense is depreciation expense, and it is in the amount of $83. Our next account is salaries expense, and its adjusted balance is $2,300. Our next balance is rent expense, and its adjusted balance is $400. Our next balance is supplies expense, and it is in the amount of $1,600. Okay, and then I think that is all of our expenses. So the next thing we need to do is get a total. And it would be 83 plus 2,300 plus 400 plus 1,600. So our total expenses are $4,383. So remember, these are not columns for debits and credits. These are columns for subtotals and totals. We don't have debits and credits on our financial statements because the users of the financial statements are not accountants, and they would not understand debits and credits. So then we can say that net income is equal to revenue minus all of those expenses, which total to be $4,383. So net income is $3,217. And that $3,217 matches the number we expected to see that we had calculated on the worksheet. Okay, next we'll prepare the statement of owner's equity, and first we do the title of the financial statement. It's your company name, the name of the statement, statement of owner's equity, and then this is for a period of time for the month ended September 30th, 2018. Okay, the first thing that goes on your statement of owner's equity is beginning capital. So we have Christina, capital, September 1, and it is for $17,800. And beginning capital is 17,800, so that's before you add net income to it, that's the number you would put. And then you would add investments. Let's just put owner's investments, and we didn't have any, so that we could just put 0. Then we would add net income, which we get from the income statement above, and that was 3217. And then we would subtract out any withdrawals. And if you look on over here, we had 2,000, so we would subtract out 2,000. And then that would get us to Christina's ending capital. So now we would say 17,800 plus 0. See, and then plus 3217, and then minus 2,000. And just be sure when you're putting your formula in that you put it in correctly. So it's 17,800 plus the 0 plus the 3217 minus the 2,000, or since it's got parentheses around it, you can just net those three numbers together. And so your ending capital is 19,017. Okay, now we'll prepare the balance sheet. We will start with the name, Christina's Piano Service balance sheet. But this time the date is different, because instead of a period of time, the balance sheet is for a moment in time. So we will just have the date, not for a period of time. Alright, so the balance sheet has assets plus liabilities equal owner's equity, or assets equal liabilities plus owner's equity, sorry. So we're going to have our assets first, so we're going to look at what assets we have, and the first one you will see is cash, and it is for 35, it has an adjusted balance of 3,500. We have accounts receivable of 4,000. We have prepaid rent of 800. We have supplies of 1,700. We have equipment of 15,000. And then we have accumulated depreciation, which is a contra account. So it's a contra account. I'm going to put it in as a negative because it reduces my equipment account. So my total assets is equal to the net of all that. Okay, next I'm going to list my liabilities, and for liabilities I have accounts payable and salaries payable. And accounts payable is 3,600 and salaries payable is 500. So I'm going to get a total there of my liabilities. And all I'm going to do is sum these two up, and I have my total liabilities. So my capital needs to come from above. And it is 19,017. Okay, and because total assets this number here needs to equal total liabilities and owner's equity, we should be able to get the same number down here. And we do. Now here you see capital and equity. You could put total liability plus capital here, but you see that these equal. So because my total assets equals my total liabilities plus capital, then that means my balance sheet is in balance. So I have completed preparing my financial statements.